10 Best Tips for Starting Cryptocurrency Investors. Every day, we hear headlines on various news platforms about this or cryptocurrencies, and since the most recent market drop, the market has been in a state of confusion. But that's precisely the problem. Everyone seems to be pointing out the issues, but nobody seems particularly willing to offer solutions. This is why I felt the need to upload this video and offer some helpful advice to help you navigate your trade during a period when the market appears to be on the upswing. These tips are closer to safety guidelines, and as the warriors know, such rules are engraved in blood. Even though human lives aren't in danger, losing money due to trading without practical guidelines isn't a pleasurable experience. Hello investors. Welcome back to the Financial Freedom Explained. So how can we prevent costly errors from occurring? How do we ensure we're always on the right side of history? Firstly, you must realize that successful trading demands excellent attention. It is not a game of chance and never should be. The most popular instrument among traders operating in the cryptocurrency market is Bitcoin. Bitcoin is very beneficial, but Bitcoin trading should be done carefully because of substantial risks. So here top 10 tips to avoid the risk. So, let's get started. Number 10. Identify your reasons for engaging in each deal. Now, while it may seem obvious, you must have a specific goal in mind before you start trading cryptocurrencies. You must have a reason for beginning to trade cryptocurrencies, regardless of whether it is day trade or scalp. Trading digital currencies is a zero-sum game. You must understand that every gain has an equal and opposite loss. Someone gains, while someone else loses. Large whales dominate the cryptocurrency market, similar to those that place thousands of bitcoins in the market's order books. Can you guess what these whales excel at doing? They patiently wait for innocent traders like you and me to make just one mistake, leading to errors that could have been avoided, resulting in our money ending up in their hands. There are instances when it is preferable to make a loss rather than lose a lot of money quickly, whether you are a day trader or a scalper. Based on our years of market monitoring, we can confidently say there are days or times when you can only stay profitable by avoiding specific trades. Number 9. Establish profit targets and employ stop-loss orders. Firstly, learn about the stop-loss concept in trading if you've never heard of it. An order type known as a stop-loss order is used by traders to enclose a profit or limit a loss on an open position. By putting down a stop-loss order, traders can limit their risk exposure. When security hits a price, known as the stop price, a stop-loss order instructs the market to close out the position by buying or selling the stake at that price. So back to the tip, whether generating a Bitcoin profit or not, we must always know when to exit a deal. A relatively unusual talent in most traders, setting a defined stop-loss level might assist you in limiting your losses. The most important thing to remember in this situation is that choosing a stop-loss is not something you should do randomly, and you shouldn't let your emotions get the better. The price of your currency is a great spot to establish your stop-loss order. For example, if you bought a coin for $1,000, set that price as the lowest amount you're ready to accept in exchange for your cash. This will ensure that, in the worst-case scenario, you can still recover your initial investment. The same holds for profit margins. Stick to your exit strategy if you want to leave the market once you've made a particular minimum profit. Avoid being greedy, it never looks good on anyone. Number 8. Say hello to FOMO. Fear of missing out is known as FOMO. From an outsider's perspective, it is never a pleasant scenario to witness people make large profits within minutes from pumped-up currencies. This is one of the most well-known reasons why many traders fail. If Bitcoin has surged, you've most certainly missed the beneficial moment of the rising trend, and you'll finish up paying a premium for an item that will inevitably lose value, leaving you with a significant loss. One of the key reasons so many beginning traders fail is that they succumb to FOMO. Be cautious and acknowledge that some lucrative offers weren't meant for you. Number 7. Control your risks. Big pigs get eaten, while little pigs eat a lot. This is remarkably accurate when trading Bitcoins because of market profits. Wise traders never take the direction of huge earnings, they never do. They want to remain put and make steady, little earnings from regular trades using the official Bitcoin Up app. Think about putting a smaller portion of your portfolio into a market with less liquidity. Such large trades call for greater tolerance, and the profit and loss goal points will be placed further away from the purchase price. Number 6. Underlying assets cause volatile market conditions. The current market price of Bitcoin determines the values of most alternative coins. It is crucial to comprehend how volatile Bitcoin is compared to fiat currencies. This can be stated more simply by saying that when the value of Bitcoin increases, the value of all coins decreases, and vice versa. When the price of Bitcoin fluctuates, the market is typically opaque, making it difficult for most traders to understand what is happening in the market. It is best to either set modest aims for our trades at this point or refrain from trading altogether. Number 5. Don't buy something just because it's inexpensive. Most newcomers make the same mistake. They purchase a coin because it appears inexpensive or is within their price range. Consider someone who prefers Ripple to Ethereum since the latter is much less expensive. A coin's market valuation, not its cost, should be the primary factor when deciding whether to invest in it. The same holds for cryptocurrencies, which are also measured by their market capitalization, calculated using the formula current market price x total number of outstanding shares. There is no difference between a coin priced at $10 per coin and 1 million shares overall in the market, and a coin priced at $100 and has 100,000 shares total in the market. This makes using a coin's market cap rather than its price to determine whether or not to invest in it more logical. If a cryptocurrency has a higher market valuation, it is more suitable for investing. Number 4. Buy Bitcoin and keep it. There are various kinds of Bitcoin trading tactics. As previously mentioned, the buy and hold strategy is a passive one in which positions are held for a period ranging from weeks to years. There are several advantages to this. You may avoid Bitcoin's short volatility by purchasing and retaining it. Significant movement is expected during any given day, indicating that your stop loss and take profit targets have been quickly reached, forcing you out of your trade. This can then result in overtrading. Since it is expensive to create a new position, overtrading can significantly reduce your profits. As a passive trader, you can maintain your position and possibly make a good profit with minimal effort. However, it would help if you still had a solid risk management strategy, including well-researched stop-loss orders. Number 3. Investors in altcoins, a quick one. Many alternative coins eventually lose value over time, often in an abnormally short period. Therefore, it is crucial to realize that you should use caution when holding an altcoin for a prolonged period. One of the best indicators is the daily trading volume of coins suited for long-term investments. The larger the daily trading volume, the more appropriate the asset is for long-term investments. Consider investing in some of the following cryptocurrencies if you want to use them long-term: Dash, Factor, Monero, and Ethereum, ETH. These are traded rather often on several international exchanges. Make sure to carefully look at the price charts for these coins and note any price peaks. The patterns might help you determine the ideal times to sell or acquire a coin. Number 2. Diversify. Investments can lose value at any time. Even those that appear to generate endlessly positive returns are subject to change depending on the state of the economy. Even more erratic are cryptocurrencies. While it's true that you can make millions of dollars in a day or less, the converse is also true. Your whole investment in digital assets could be lost in a split second. Therefore, diversification is the most effective strategy for overcoming such risks. Do you recall when Bitcoin hit an all-time high in late 2017, early 2018? Everyone knew that the best course of action was to purchase as many digital currencies as possible to increase their value relative to the dollar. But as you may have observed in the second part of 2018, having a volatile base asset like Bitcoin has drawbacks. Many people have become wealthy thanks to Bitcoin in the shortest period ever for any investment. The fact is that billionaires were created, but most people never seem to realize that many individuals also lost money. And despite all of this, the currency increased its market cap by almost 30 times over the previous year. As a result, traders are free to maintain Bitcoin as their primary asset, but they must also understand that they cannot ignore the dollar's inherent value. To disperse your risk, you must diversify away from the same kind of asset in several sectors. Other equally feasible assets not as dangerous as cryptos include real estate, mutual funds, equities, etc. Number 1. Pro tip. This last tip will provide you with practical actions you can immediately use to improve your trading. Use the goal setting tool by placing sell orders. Set your revenue goals by putting sell orders in the order books. You can never predict when your order price will be satisfied, giving you just what you require. Additionally, since sell orders are the market makers, they are subject to lower transaction fees. So here we end our video. Make sure to subscribe to our channel and press the bell icon so you can watch more videos like this one quickly. Thanks for watching.